Good morning, everyone. Welcome to Pre-Market News and Views by In the Money Stocks. Today is Friday, June 17th, 2011. It is the end of options expiration, so all options will expire. Today is also a quadruple witching expiration, which really means everything under the sun is going to expire. So, again, quadruple witching expiration day today. We'll see how this all plays out. We are getting a big move higher this morning in the S&P 500 E-mini futures, trading up about 11 and a quarter points. This is the M contract. Next week we will roll over to the U contract, but I'll display the M contract for now. And you can see that we've had a really robust move up, trading up about 11 and a quarter points. Now, if the S&P 500 E-minis are higher, that can only mean that the U.S. dollar index is lower. Let's take a look at the U.S. dollar index. Really has just pummeled today, down about 55 cents after a very good move yesterday again. But U.S. dollar index really getting hit hard today, and it is down about 54 cents. So far, you could see we put a little bit of a high in yesterday, pulled back off that high, and today you're getting some follow through to the downside. So very important to follow. But right now, good little pullback there in the U.S. dollar index, and that is helping to inflate the markets. Dollar down, market up. It's pretty much that cut and dry. Again, dollar is down about 54 cents as we speak. So we'll see how this all plays out. We are getting a little bit of a lift on the dollar there, and that will ultimately take down the futures a little bit. And you can see 1, 2, 3, 4 bars down on the futures, S&P 500 E-mini futures. And here you can see 1, 2, 3, 4 bars up on the U.S. dollar index. It's almost 1 for 1 for most of the time. It's a real inverse lockstep relationship, at least right now. So dollar is very correlated to the markets. Dollar up, market down. So very important. Now we do have oil down today. Oil is trading lower. Let's take a look at the USO in the pre-market. Yesterday the USO closed at 37.42 a share. Today you're seeing the USO trade around 36.93. Spot crude, I believe, is down about a little over $1 at the moment. So another decline for spot crude. It's been a pretty big move lower so far for oil. It really has been. If you look at the daily chart here, you'll see that, let me just get rid of these lines and clear this chart up. You'll see that oil has really fallen. There's going to be pretty good support, though. I have a black line in here right around 36.43. So again, oil still has some further downside. This was all, choppy, sloppy, bearish consolidation there. So you see a nice little fall in oil this morning. Again, if the dollar falls enough, oil probably could see a little uptick or a little bit of a bid. We don't want to rule anything out. But today, so far, oil is moving lower, and that is helping the markets a little bit, so it seems. Now, you have gold down a little bit. Let's go to the GLD. So GLD is trading right around 148.88. Yesterday, GLD closed at 148.97, so down just a touch. SLV, which is not the greatest looking pattern, has rallied back a little bit. Was trading down all the way down to this 34.12 level. Has rallied back a little bit, and it's trading right around the 34.51. SLV closed yesterday at 34.65. So you do have gold, oil, and the silver all trading down a little bit ahead of the opening bell at the New York Stock Exchange in the pre-market here. Now, a lot to cover going forward. I'm just going to go back to the E-mini chart, but a lot to cover there. It looks like there is some news that Germany and France are going to take a leadership role on this new Greek bailout. That's the rumor. That's the news. Who knows what is true, what isn't true. I can't make a lot out of it, but right now the market seems to think that replacing the old Greek prime minister with a new prime minister is going to help. I really don't see it, but for now it's a temporary sign of relief, I guess, for the markets. Markets are buying into it. They're trading higher, and we'll see how it goes. These markets are very oversold, due for some kind of short-term bounce, in my opinion. But nonetheless, we'll see how this all shapes up. We can only wonder if Ireland, Portugal will need a bailout or a restructured bailout after they've already been bailed out again, and will Spain and Italy come into focus very soon? Belgium is also in trouble. Lithuania is in trouble. The list just keeps growing. So again, and we don't even know if France is really that solvent either, because they have banks with a lot of exposure to Greek debt and other nations in the eurozone. And I'm a little suspect about France myself. So again, this is going to last throughout the summer, throughout the entire 2011. But for now, we're getting a short-term bounce. More important than following the news or even listening to the news, which for the most part is theatrical and somewhat nonsense. Just watch the dollar. That's really all you need to do right now. All traders should keep an eye on the U.S. dollar index. I think it's most important there. Now we do have the European markets trading up just a little bit. They're not soaring by any stretch. Germany is up pretty sizably, and France is up over 1%. Germany's up about 1.5%. But the FTSE, which is not part of the eurozone, is just up 0.3%. So you're getting a little rebound there. Last night the Asian markets were down for the most part. The Hang Seng was down over 1%. The Shanghai, which is I think the most important index of them all, was down about 0.8%. And then you had the Nikkei down about 0.6%. So Asia was really down overall. India was down 0.6%. You did have Australia positive by 0.1%. So that was just a really a flat market there for Australia. But they are very uh, heavily reliable on copper and commodities and things of that nature. So again, for them to scratch out a little bit of a gain, they're trying to put in a little bit of a low. Australia has been just devastated on the charts. So again, they did scratch out just a little positive gain last night. So today we're seeing the markets trade up higher a little bit. There is a little bit to talk about as far as stocks go. I'm sure everybody's looking at it, but Research in Motion has just been clobbered. This stock has been in a nasty downtrend forever. It seems like forever. Apple's been eating its lunch here, and this continues. Yesterday closed at 35.33. Look where it is this morning, all the way at 29.68. Went as below $29 to $29 this morning. So that is a major sell-off for Research in Motion. You can take a look at Apple this morning. Apple is trading higher a little bit, not a ton, but it's up a couple points. Closed at $25.16. Today it's trading as high as $27.40 at the moment. Was a little bit higher. So we'll keep an eye on Apple. Today is quadruple witching expiration. So expect that early volatility probably in the first hour, maybe the first 90 minutes. After that, the market probably goes to sleep for a while until the final 30 minutes. There you'll get a lot of Russell rebalancing, end of quarter stuff like that. Today is quadruple witching, which only occurs once every quarter. So it occurs in March and June, September, and December. So again, you're going to get a lot of activity probably in that final 30 minutes as the computer programs have to figure out which holdings they're allowed to have, which mutual funds are going to move into certain stocks. So you're going to get definitely some activity towards the latter part of the day. If the market is calm throughout the day, then expect that activity right before the close, maybe 45 minutes to an hour before the close. Maybe it's 30 minutes before the close, but somewhere in that last hour. That's just generally what we look for every quadruple witching. Okay, so with that, I'll leave it here. Futures are up 11 points. It's a very good move today. We'll see if it can stick into the close. It has a real good possibility of doing that today. Quadruple witching is usually more of a day for the institutions than for the news. It looks like the news is very calming, and you could bet your bottom dollar that the administration was out there telling the European Union to get something together for the weekend. They don't want to have another down Friday. With the exception of Memorial Day, the markets have been down Friday, down on a Friday, big, which means about over 100 points or more, 4 weeks in a row. And I just think that it's probably just crushing the U.S. economy, which relies so much on the consumer spending. 70% of the consumer spending is the GDP in this country. So again, we'll leave it at that. Have a great morning, great trading day. Those of you in the chat room, I'll see you all on the charts at 9:30. Have a great day now.